Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So that's one of the very first things that we can do to kind of see what the expected move is going to be. So even if you don't trade options, I think, and you trade just spot FX, I think it would be wise to check those just to make sure that your expectations of moves are not too far out from what the options markets are saying, or you better have a good reason, if your expectations are way out there. Okay, so next thing what I want to do is I want to look at a structure of volatility in EUI versus an SPY and kind of notice a couple of things about that, and hopefully will guide us into selecting a certain types of strategies. But we have to kind of be careful not to make some premature decisions. So here what I've done is on the top is again EUI, and what you see is in red is the historical volatility, in red is the implied volatility for EUI, and gray is the historical volatility of EUI. And for comparison purposes, underneath that, I've displayed the same thing for SPY, for S&P 500. So the one thing, this comes from Live Vol Pro. These guys out of California, they have a great platform for visualizing different types of volatilities, by the way. This is where I've generated these charts. So one of the things you'll see is that the pattern kind of looks the same. The implied volatilities tend to be higher than historical for both EUI and SPY. There are spikes in implied volatility that tend to fall back. And, maybe like based on that, premium selling programs may work. Like we know that, selling premium on equity indices like iron condors and so on tend to do well over time. So maybe it would work as well. But we'll see shortly that it's not so easy, so simple, and in fact it doesn't quite work. But the first thing is look at the right-hand side where you see the actual levels of volatility. In SPY, it's in the 20s right now. And generally, the implied volatility in EUI and in FX is in the low teens, right? So there's much lower premium in the options, and as we'll see a little bit later, is what contributes to the fact that it would be very, very hard to make money by instituting these premium selling programs. One of the other things that we want to look at is we want to look at the behavior of skews across these products and sort of see how they're similar or how they're different, from things that you may be a little bit more used to. So here I have a skew chart for EUI that I think it's got August, September, D's options, and SPY has a little bit more data there. Now August expiration is upon us, so that the red one is August, so maybe not, don't look at that necessarily. But one of the first things that kind of jumps at us is that the skew is pretty heavy and steep on the call side in EUI, right? So if you look at like the yellow line, which is the SEPs, and even the D's, this is fairly steep. And basically what this is saying is that this is where kind of the options market is expecting the move to occur, right? So it's kind of saying, well, the U.S. dollar rally is maybe not over, and we still see, at least the options market anticipates that to continue. It doesn't mean that's going to happen, of course, but it's sort of skewing that certainly to the upside, because if in fact that they expected that they kind of didn't have a preference, which is often the case where you see similar skews to the put side and the call side, you should see something more symmetric. Now, this is quite different from the SPY. You see in the SPYs, you have a steeper put skew, which is kind of a more of a usual picture in the equity indices, where people expect, or rather, they have some fear about fast moves down, and the out-of-the-money puts tend to be priced higher. So this kind of thing may lend you to believe that there are certain strategies that are maybe better than others in one product or the other. So, for instance, I don't think, given this kind of skew, I want to do credit spreads on the calls on the EUI. Whereas in SPY, I think that may work fine. And a little bit later on, we'll get to see sort of how that looks. Okay, so now I want to show you a run through a scenario where we actually can check, what types of programs work in which markets, right? So the point is, we can have this, how do we discover sort of what works and what doesn't? We can put trades on. You can sort of test markets this way. When we were developing Risktail, we always thought that it would be nice to be able to kind of empirically test the certain assumptions and certain strategies, see how they would do in different volatility periods. So let me run a couple of things for you. First in SPY, and then we'll do the comparison in the FX options. Okay, so I will, hopefully you get to see my screen. All right, so I'm now going to try to run a simple strategy that will be basically selling iron condors on the SPY. And this is the Risktail beta platform that we're currently developing. And the way you use it is you specify parameters for trading asset allocation criteria here to the right, to the left, and then you see some output to the right. So let me do an iron condor. We're going to do it short, and I'll do 18 delta. That's a short delta. It's going to be symmetric, and hit run. So what it's doing, it's actually going through 2 years of data, and it's just generated us a sample equity curve that basically, this is what your life would have been like had you put that on from 2007 to 10/30/09. And so as you can see, like this account was started at $100,000 here. It's ended at $120,000, and the volatility profile we show here at the bottom. You see implied and historical volatility. We can actually zoom in and see where the implied volatility was greater than historical, applying these filters. So now you can actually see the periods of time when that was true.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.